Even though the market is currently crashing, Applied Digital just dropped some seriously impressive news in their latest earnings call. And honestly, I'm kind of shocked this isn't getting more attention because what they've achieved is pretty remarkable. So let me jump straight into the meat of what happened, the biggest bombshell being that massive CoreWeave deal we've been hearing whispers about. We're talking about a 15-year lease agreement for 250 megawatts at their Polaris Forge 1 facility in North Dakota, and this isn't just any deal. This is a $7 billion contract over the life of the agreement. When I say that number out loud, it still doesn't feel real. Applied Digital's total revenue for the fiscal year was $144.2 million, up from $136.6 million the previous year, and this CoreWeave deal alone is going to pump roughly $467 million annually once it's fully operational. That's more than triple their current revenue from one single contract, which is absolutely insane when you think about it. CoreWeave isn't some random startup either. They're backed by heavyweight investors including NVIDIA, and they're basically building the infrastructure backbone for AI workloads. So the fact that they chose Applied Digital as their partner for this massive deployment tells you everything about where the AI infrastructure game is heading. The CoreWeave warrant situation is pretty interesting too. As part of the deal, they issued warrants for over 13 million shares at $7.19 per share to CoreWeave, which is an $85.7 million fair value warrant that shows how committed both sides are to making this work. CoreWeave even exercised their option for an additional 150 megawatt facility that's planned for 2027, bringing the total potential capacity to 400 megawatts at this one location. The first 100 megawatt facility is expected to be operational by the end of calendar year 2025, with the second 150 megawatt facility coming online in 2026. What's really wild is the scale of financing they've pulled together to make all this happen, and this is where things get really interesting from an infrastructure perspective. They closed a $450 million convertible notes offering in November. That's serious institutional money betting on their vision, with the net proceeds being around $435.2 million after deducting fees and expenses. Plus, they secured a $375 million credit agreement with Sumitomo Mitsui Banking Corporation specifically for the Polaris Forge development, which provides both base rate and SOFR loans with an 18-month maturity. But here's the kicker. That Macquarie partnership is absolutely massive. We're talking about up to $5 billion in funding to drive HPC growth. $5 billion. That's not venture capital money, that's infrastructure-grade financing from one of the biggest asset managers in the world. When Macquarie puts that kind of money behind something, they're not betting on a tech stock. They're betting on critical infrastructure that's going to be around for decades. The partnership strategy they've built is actually brilliant when you dig into it because they've got ABB providing specialized power architecture specifically designed for AI data centers, and this isn't your standard data center electrical setup. AI workloads have completely different power requirements, and ABB is basically the gold standard for this stuff. Then there's the BACS partnership for water-free cooling solutions, which in places like North Dakota where water might be an issue, having advanced cooling that doesn't rely on massive water consumption is a huge competitive advantage. Their geographic strategy makes perfect sense too, because North Dakota gives them access to cheap, reliable power and a regulatory environment that's friendly to this kind of development. Plus, they're building with renewable energy sources, which matters more and more to these large tech companies. When you're talking about 250 megawatts of continuous power draw, energy costs make or break your margins, and Applied Digital gets this better than most. Now let's talk about the elephant in the room. They're still posting losses with a net loss of about $231.1 million for the fiscal year, despite total revenue of $144.2 million. But here's the thing, when you're building infrastructure of this scale, losses are expected and frankly inevitable. Amazon didn't make money for years while they were building AWS. Tesla burned cash for over a decade, and Applied Digital is in the middle of one of the biggest infrastructure build-outs in the AI space. They've got over $1.1 billion in construction construction in progress on their balance sheet as of May 31st. And that's not just plans on paper, that's actual steel and concrete going into the ground. A big chunk of those losses came from fair value changes on debt instruments and conversion costs, which is typical accounting noise when you're doing complex financing deals like they've been executing. The shift in their business model is fascinating too, because they're moving away from crypto mining hosting and going all in on AI and HPC infrastructure. The numbers tell the story. Their data center hosting business, the crypto side, generated $63.9 million in segment profit, while they're investing heavily in the HPC side, which had an operating loss of $12.1 million as they build out capacity. Yeah, they're burning money right now, but that's what happens when you're building the future. They ended the quarter with about $41.6 million in unrestricted cash, plus another $41 million restricted for construction, and with the credit facilities and the CoreWeave payments coming online, they seem well positioned to execute on their build-out plans. With that Macquarie backing, cash flow shouldn't be an issue going forward, and the predictable revenue from 15-year agreements with built-in escalations is exactly what institutional investors want to see. This isn't boom and bust crypto anymore. The competitive landscape is getting intense with established players like Equinix, who've been in the data center game forever. But Applied Digital's secret sauce is their specialization. While Equinix builds general-purpose data centers, APLD is building purpose-built AI infrastructure, which is a completely different game entirely. You've got companies like Digital Realty, NTT, and various private operators all fighting for market share, but most of them are still thinking in terms of traditional colocation and enterprise workloads. Applied Digital saw the AI wave coming early and positioned themselves to ride it with purpose-built facilities that can handle the massive power density requirements that AI workloads demand. What really gets me excited is how they're thinking about scale, because that CoreWeave deal is just the beginning, and they've got the infrastructure, partnerships, and financing to become a major player in AI infrastructure. With companies like NVIDIA backing some of these deals through their investment arm, it's clear that the chip makers see Applied Digital as a critical piece of the AI ecosystem. The beauty of their North Dakota location is that it's not just about cheap power, it's about sustainable power too, with access to renewable energy sources that help these big tech companies meet their ESG commitments. Plus, the cold climate naturally reduces cooling costs, which is a huge operational advantage when you're running thousands of GPUs at maximum capacity. The market might be freaking out about everything right now, but when you look at Applied Digital's fundamentals and what they've locked in with CoreWeave, this feels like one of those situations where the stock price and the business reality are completely disconnected. They've essentially transformed from a crypto hosting company into a critical piece of AI infrastructure, and they've got the contracts to prove it. The HPC market is exploding, and Applied Digital just positioned themselves right in the middle of it with one of the biggest players in the space. That CoreWeave deal alone validates their entire strategy shift, but what's really exciting is the pipeline they're building for future deals. They've got the land, the power agreements, the partnerships, and the financing to scale this model across multiple facilities. The fact that CoreWeave already exercised their option for that third 150 megawatt facility tells you they're planning for serious growth. When you consider that the global AI infrastructure market is projected to hit massive numbers over the next few years, and Applied Digital has locked in long-term agreements with escalating payments, this could be one of those generational infrastructure plays that people look back on as obvious in hindsight. Sometimes the best opportunities come when everyone's focused on the noise instead of the signal, and right now all the noise is about market volatility while the signal is screaming that AI infrastructure is the future. And don't forget, guys, this is not financial advice. Hope you guys enjoyed the video. Subscribe for more, and we'll hear us again very soon. Take care.